It's Control Trades, and in today's video, I'll be discussing options flow and more specifically options sweeps. So what an option sweep is it's essentially an order for a large number of option contracts that have the same strike price and expiration dates for a given ticker. So on the screen, I have an infographic depicting the option sweep process. So on the right side here, you can see that a sweep was detected for 101,000 total dollars in premium for Apple, $330 calls, and the individual trader bought these calls above the ask. So what the option sweep allows traders to do is it allows them to get their orders filled as quickly as possible. And allows them to do this by breaking down this large order that you see on the right into individual smaller orders that will then get filled on multiple different exchanges. So this $50,000 order here that you see will get filled on one exchange, and then this $8,000 order will get filled on a completely separate exchange. Both this $50,000 and this $8,000 order both belong to this $101,000 order, but the sweep order type allows this order to get filled quicker by breaking it into smaller pieces. The option sweep is one of the most aggressive order types that you'll see in the option markets, and it allows buyers to get into their desired position as quickly as possible, like I described before. And buyers usually want to get into this position as quickly as possible because they anticipate that a large move is going to occur in the near future. And there are two different assumptions that we can kind of make about option sweeps. One is that the majority of the people using them or traders using them belong to institutions. And I say this because retail traders are not going to have $500,000 to a couple $1,000,000 to place to execute an option sweep. So we can just assume that they're traders at institutions, smart money essentially, that are using option sweeps. The second assumption that we can make is that the traders using these option sweeps have done their own due diligence prior to placing the order, or they may know information that we do not. And I say this again because no one is just going to go and throw $500,000 or $1,000,000 at an option trade without doing proper research or their own due diligence about the trade. And just a disclaimer I would like to put in here about option sweeps is that option sweeps should not be the sole reason why you enter a trade. You should not see a sweep appear and just simply follow that trade blindly. What option sweeps should be used for is they should be coupled with either your own technical analysis or fundamental analysis. And therefore, option sweeps should just be a way of confirming existing theories that you may have, or even just to start theories into a certain trade, but they should not be the sole reason why you enter a trade. So some platforms that you could use to access option sweep data are barchart.com, callerputs.com, Flow Algo, Cheddar Flow, Trade UI, etc. So what Barchart has is if you go to their unusual options activity section, is they provide you with free access to option sweeps that they have scanned throughout the day. And they also give you historical data with regards to option sweeps. So if we go to their website right now, you can see that their user interface is relatively simple. If you want to go and view past option sweep data, you can just go view data from, click the little calendar icon, and then you can pick a day anytime in the past. And then here on the screen, you can see that, like I said before, the user interface is relatively simple. They give you the ticker symbol right here, whether the contracts purchased were calls or puts, the strike price, the expiration date, the day sale expiration, etc. The website or the platform that I personally use is called callerputs.com. It's a recurring subscription service. It costs $50 a month. They have discounted plans if you want to go yearly or lifetime, etc. And the reason why I like this option platform specifically is because it's very simplistic. And in trading, simplicity is king. The simpler a system is, the faster your decisions will be based off that system. If you're looking at something very complex and has a lot of moving parts, etc., it's usually going to take you longer to come to a final decision based on that system. So that's why I value simplicity over a lot of things uh, personally as a trader. And what calls or puts has that sets them aside from other options platforms is they provide traders with filters that they deem as aggressive and possibly opening positions. And these are usually positions that should catch your attention and you may want to follow if your analysis confirms it. So if we go to the options platform callsorputs.com, you can see that their user interface again is relatively simple. They have the ticker, the strike price, expiration date, the days till expiration. They have it color coded for calls are going to be red. Calls are going to be green. Puts are going to be red. My bad. And they have the trade type, etc. They have sweeps and trades here. Just anything that seems very unusual in their eyes. And then, like I said before, they have different filters. So the gold filter is possible opening positions. The rose gold filter is 0 DTEs. The silver filter is again aggressive positions, but they're not as aggressive as the gold filter. And then you can also just filter by all activity if you want to see all sweeps that are coming through live. And if this was a regular trading day. Right now it's a Sunday, but say this was like Monday through Friday, there would be live sweeps coming in throughout the day, and this would be constantly being updated. So let's now discuss what I look for personally when I'm looking at sweeps. The first thing for me that I want to see in an option sweep is that the expiration is rather close. So I want to see that it's within a year from the current date. So, for example, right now it's December. I'm not going to look at anything that's December 2022 or past 2021, really. I want to see things that are from now to the end of 2021. That's the only thing I'll be really paying attention to. And then there's two different scenarios that will catch my attention when it comes to these option sweeps. The first one is that I see consistent flow, or the second one is that I believe that an option sweep is an opening position. So when I say consistent flow, what I'm referring to is that I see option sweeps, multiple sweeps coming through for the same ticker that have the same sentiment, meaning that it's all calls or it's all puts, and they have the same expiration date. So an example of that we'll look at in a little bit was on Friday. Disney had a lot of calls coming through for that week's expiration or the following week. And then when I refers to opening positions, I want to see that the volume of the contracts being purchased is much greater than the open interest. The second checkpoint that I want to see is that the size of the option sweep and the number of contracts purchased is almost 85% of the total volume for that given contract. And then the third thing that I want to see is the fill price, the price that the actual sweep was filled at is at or above the ask. And that just shows us that the trader that was using the sweep was very aggressive and they wanted to get in as quickly as possible. So now if we go into callsorputs.com, I have a couple examples. So for consistent flow, this is a perfect example. On Friday, as you can see by the green surrounding the Disney ticker, this means that only calls were coming in here. And as you can see, it's all green. So we see consistently that everyone using sweeps on Friday between 9:35 to 9:48, they were very bullish. So this one is going to catch my attention if I only see calls or if I only see puts coming in for a specific ticker. And then the second thing that also caught my attention is just the size of these orders. You can see $2.2 million, $1.9 million, $3.4 million. There's a lot of money going in to these trades here. So if we look at the Disney chart, all of these trades began coming through at 9:35. So right after we had this initial drop, these sweeps started coming in right as this candle opened. And as you can see throughout the day, these calls just kept coming in, consistent flow, and Disney just rallied throughout the day. So if you saw that consistent flow, you saw that maybe you liked the volume, maybe it was at a key level, you could join in on the trade and you could have rode this for a nice gain on the option contracts. As you can see, Disney moved about $13 or 8% on Friday. And if you had option sweeps, you would have been able to capitalize on this move. The second example is an example of an opening position. So a great example would be there were Snapchat puts on Friday, as you can see by the red circle here, and the trader spent $500,000 here, so it is a very aggressive order. And then let's look at the actual criteria that I discussed prior. So the volume here is greater than the open interest, 262 contracts greater than 58. And then the size of the order is over 85% of the volume for that specific contract. So here you see 244 contracts were purchased by this trader, and the total number of contracts traded on that day was 262. So this trader bought most of the contracts that were even traded up to this point so far. And for me, that's enough that constitutes an opening position. Another thing to note is that this is only for April 2021, so it meets that within 1 year requirement. And if we go to the snapshot chart, we can see this specific sweep came in at 10:22 on Friday. And right after the sweep came in, we saw that it was consolidating directly under support that became resistance. And then after a little bit of consolidation, a couple minutes, this is the 1 minute chart, we saw a nice drop to the downside of around 1%. Again, this was something that you could have capitalized on if you had an option sweeps or if you were watching sweeps come through on Friday. One thing that I want to note is that these option sweeps are not always going to work out. Most of the time, they may not even work out. That's why I look for either consistent flow or opening positions. You have to remember there's humans on the other side of these trades, so their guess is just as good as your guess. The stock market is a random series of events, so no one's going to be able to predict it with 100% accuracy. If someone tells you they can, they're lying. So like I said before, you have to use these sweeps with some sort of analysis to actually make a decision, whether that be technical analysis or fundamental analysis. So that concludes this video. If you guys have any feedback regarding how I made the video, what I could have done better, please leave that in the comment section. And then if you have any feedback in terms of topics that you would like to see me discuss in the future, you could also comment about that. If you guys like the video, please leave a like and subscribe for more content. I appreciate you guys watching. I'll see you next time.